right, what's up everybody? This is Fairsley with Trade with Tex. Today I wanted to make a quick YouTube video talking about one of our go-to strategies for day trading gold and other futures tickers. Okay, so basically, just to kind of preface this before we get into the day trading strategy, you don't need to be a futures trader to make money on this. You can trade various ETFs or even options, right? Like Nugget, JNUG, Dust. A lot of people are familiar with those. Okay, those are gold leveraged ETFs. On top of that, if you do trade futures, you might already have a similar strategy, but this one works very, very well, and it uses two different time frames. Okay, so we nailed a gold short sell earlier this week. It sounds all fancy, but in reality, it was just a point A to point B key level trade. It was based off of two different things, and I want to start off on the larger time frame just so that we can get into the technicals behind this. Okay, so pretty much what we're doing is we're using a larger time frame to get the big resistance level and the big key level for gold, and then we're using a shorter time frame in order to get the actual signal, which is, something that's pretty common. If you've ever played, for example, a 200-day bounce, right, a 200-day SMA bounce, very common setup, especially for new traders, or a 50-day. That's the exact same thing in the sense that you're using a larger time frame for the key levels in the trend analysis, and then you're zooming in to the intraday analysis for the actual signal. Okay, so we're going to be using the daily time frame to look at the big picture here on gold. That's the 1 year, 1 day. Okay, and we're in the Thinkorswim platform here, which is just a free one because this is more popular, so I'm sure a lot of people use it. Either way, for that strategy in general, you're looking at the 1 year, 1 day, and I'll zoom out to it now. In order to get a good feel of where the key levels are. Now, for gold, yesterday on the Iran-US news, and this is pretty important, spiked up overnight, right? It spiked up, it tested its 52-week high and a big historical resistance level at 1565. Now, first things first, we're not just trading gold on any given day. Normally we do, but we're not just waking up today and saying automatically we have to trade gold. What we're looking for is a big key level test. So naturally, when we gap up hard above the resistance, this sticks out, right? This sticks out big time. So the resistance here is the prior 52-week high of 1565. Now, in the past, we've been rejected there twice. We are gapping above it. For new traders, if you haven't been burned enough in the markets, this is something that you're probably not that used to seeing. Basically what this says is that when we're gapping above resistance, naturally a new trader is going to go, oh, we're going to rip higher. This is a breakout. We're soaring. That's not usually the case. Most of the time we'll actually just gradually fade back down until we inevitably close at that key level. So first things first, yes, we were gapping above the resistance. If we zoom it in, you can see it better, right? We went as high as 1590, but in reality, since we're looking at the 1 year, 1 day for the key level, and this is something that even some of the most experienced traders in the chat still have a hard time with. We need a close above that key level to confirm the breakout. So for now, we're actually looking for a magnet down to it. And the close is based off of what time frame you're looking at. So we're looking at the 1 year, 1 day. That's a daily close. We need the daily candle, today's candle, essentially, but it was yesterday's, to close above that key level. So until then, we're looking for that to act as a magnet. Okay, and a lot of times we'll even slide below it. Now, for gold specifically in this case, if we zoom it back in, that's as far as the long-term analysis goes. That's as far as the big time frame analysis goes, because in general, all we're looking for is a big test, a significant test, whether that's the 200-day SMA, the 50-day SMA, a key Fibonacci retracement level, whatever. Okay. Now, again, we zoomed it back into the 5-minute. This just depends on your personal preference. I like the 5-minute for faster intraday moves. I think it's really good at giving you confirmation, and that's what I struggle with the most. Every trader has their strengths and weaknesses. Mine is waiting for that confirmation. I like to jump the gun a little bit. I get a little bit antsy, right? So we've established what the key level is. I already have it annotated here, 1565. Okay, and you can see this was the gap up from gold that morning. All right, so we zoomed into the 5-day, 5-minute, but really could be any time frame that you're comfortable with. I just like using the 5-minute time frame because that's my preference. And this is the most important part of the strategy It's not just saying that's the resistance, let's go short, because you need to have a good entry point. You can't just throw a dart and hope that this trade works out, right? So in order to do that, you need a signal. Now, this signal is based off the most important part of the strategy, which is establishing the range, right? This is easily the most difficult thing outside of managing your emotions for trading, and it's defining what key levels are giving us our range high and our range low. So pretty much what this means is, what is the resistance that is holding it down, and what is the support that's holding it up? If we load up our study set with just pivot points alone, just to make a point here, no pun intended, you can see that there are a couple of pivot points below that are acting as support. This is the big one for gold. So this is overnight, mind you. This is overnight. A lot of people don't look at the overnight range, but that's mainly what I'm referring to here, because 9:30 a.m., that's the only information we have to work with, right? You can't hindsight this and say, oh, well, that was support later on, so that should have worked overnight, yada, yada, yada. No, you only have the overnight data to work with. So in this case, what we're focused on is the overnight range. I'm just going to put OVN because it's a pretty common abbreviation for it, overnight range. And normally, and really honestly, you should only be paying attention to it, if this range is defined, it needs to also kind of overlap with the key levels that you currently have. So for me, the only key level that I had near gold here was this pivot point. If you're unfamiliar with pivot points, they're just levels of support and resistance. We have a YouTube video that completely goes over them, really in depth, super simple too. They're really not that hard to add to your chart. But we added that study set so the key level showed up, and you can see gold overnight bounced off of it once, twice, and then a third time here. And we can actually make this price stick out a little bit more because we got the MACD down there taking up a bunch of space, right? So again, for gold, we bounced off of it once, twice, three times, okay? And then we broke down below it. So essentially, we had that support held, 9:30 bell rang, right? Gold puts in a lower high, which is a sign of a bearish trend, right? Lower high, and then a lower low below this support. So it's pretty simple, right? Basically what we're doing is we're looking at the overnight range, drawing the support and the resistance. So in this case, let me actually remove the MACD so we have a little more space on this chart. So we can zoom in intraday. And you can see pretty much this area here is providing resistance. I'm just going to roughly draw that. And then the support is down at this pivot, right? We've bounced off of it three times, as mentioned. 1, 2, 3. Now, intraday, gold goes down to that level, and we're already eyeing 1565, but we're not just pulling the trigger because of a larger time frame. We need intraday confirmation. So the confirmation is whether or not we have a positive or negative reaction to the support. It's the same thing if gold ran up intraday, right? Let's say this didn't happen. If gold ran up and hit the resistance, we'd still be looking for the short here because the daily time frame is testing that huge resistance, right? We'd still be looking for the short, but we're not just going to short it flat out. We either need a resistance test, right? A rejection, or a support breakdown. Okay, so clearly gold breaks down below that support. And we can kind of fast forward this a little bit. And you can see the speed of the move. And this is where a lot of traders struggle. And it's not just myself, it's traders in general. People need that immediate reassurance that they're correct. Swing trading, that's where you have some difficulty. For day trading, if you're trading correctly, you should know what time frame you're looking at for the trade to pay off. In the sense that if I'm getting a breakdown on the 5 minute, usually between 5 and 30 minutes, that trade has to be paying me. If not, I'm wrong and I need to bail. Okay, I need to jump ship. So in this case for gold, you can see the speed of the move gets accelerated big time, right? We close under the support and then we keep dropping. All right, this is the target down here. And naturally, this is where the webinar would end, right? I'd say, hey, we hit the target. It's that easy. Everybody can day trade for a living. Come sign up for $1 million a month on our subscription service. No, that's not how it works, right? Also, we do offer a free trial and it's only $50, but that's not the point. What matters here is the entry, because gold actually dropped too fast for me to get in. I was looking at it and it dropped way too fast for me to get into the trade. So I waited, right? This is the key part. I waited after that range breakdown because we got our sell signal, right? And I waited for a better price. Not saying that you have to get a specific price here, but in order for the risk to reward to be worth it, right? I need my reward to outweigh the risk back up to this key level. So when we drop down to 1568, just to give you an idea, so the support here is at 15, oh, sorry, I wrote that wrong. 1573.6. The target is at 1565. Just some quick math, right? Intraday, we dropped down to 1568. I can no longer chase that. All right, I can no longer take this trade because that's only 3 points to the target. Even though it's very likely to hit, if that trade goes against me, based off of how my trading system works, overall, I will not be profitable if I make a couple of mistakes, right? And I need to have consistent profits. So for me to make this worth it, I need this to go at least back up to 1570, right? Because what that puts us in is a nice scenario of risk to reward, where now at the very least, I have $5 of downside and I only have about $3-4 of risk, which again, isn't the best risk to reward, but in a scenario like this where it moves too quick, if you don't have a sufficient risk to reward, you can't take the trade. There's no ifs, ands, or buts, right? If you do it once, you're going to keep breaking that rule, and eventually that will turn around to bite you in the ass. Okay, so basically 1565 is the target. I waited for a lift back up of at least another $1 or $2. It's not like I, was the limitless guy and had these numbers running in my head and knew exactly what I wanted. Just wanted another $1 or $2 to the upside before getting in. So I got that at 1570 and shorted it for 5 points down to that key level. Okay, and actually I waited for the reaction of the support because this old resistance acts as support. We cracked it, so I waited and then I covered here at 1563.8, I believe it was. So it ended up being a much larger gainer. Okay, and just to give you an idea, on this futures trade, right, if you even used a small size, you raked in about $1,000, right? A little bit under. If you used an average size, you raked in about $2 to $3,000. So if you're pretty close-minded about trading futures, right, the ticker here is /GC if you need to refer to the chart. You can always trade Dust, JDST, whatever you're comfortable with. Okay, but I do highly recommend trading futures, or at least paper trading them if you're interested. Okay, because there's a lot more money to be made there. But 2 components of the strategy, just to wrap this up and keep it short and sweet, we are using the 1 year, 1 day, and using that resistance for the actual thesis on the trade, right? And then part 2 is zooming it back into the 5-minute or whatever time frame you're comfortable with, okay? Defining the overnight range, and then waiting for a test of the high or the low. In this case, we tested the low, we cracked it, and we took it to the next key level, okay? Very common strategy. Out of the last 5 trading days, 4 of them we've had this strategy on either gold, crude oil, or the S&P, some days more than once, okay? Like crude oil, I think 4 days back, we had it set up 3 times, and it's extremely useful. You don't only need to play the breakdown or the breakout, you can play it back and forth, so you can play that support if it holds, okay? But in this case for gold, it was overextended, so we looked for the breakdown. All right, simple day trading strategy. If you have any questions, make sure to leave them in the comment section below. This will be posted on the Trade with Tech's website too, so members that actually do pay the $50 a month, this will be uploaded into the thousands of hours of webinars that we have on the site. But for the time being, hope you guys liked the YouTube video, and again, like and subscribe if you did. Take care.